In this video, we're going to talk about support and resistance, and we're going to cover the basics of this concept. Now, there's three things that a stock can do. A stock can go up, which if that happens, it's said to be in an uptrend, or it can go sideways, especially during periods of consolidation, or a stock can go down, which in this case is said to be in a downtrend. Now let's talk about when the market moves sideways. Sometimes you'll see stocks with a trading pattern that looks like this. They would rise and they will fall, and then they'll go back up and then back down. It may not be as perfectly as this, but sometimes you'll see stocks moving in what is known as a trading range. In this case, this is an area of resistance. That's where the stock meets at a peak value. In the valleys, that's where you have areas of support. So make sure you understand that. So this is an area of resistance, and this is an area of support. Many short-term traders, ideally, they want to buy at areas of support. That's their entry points, and they want to sell at areas of resistance. Typically, they set that as their exit point or somewhere close to it. Now, at areas of support, there's a lot of buy-in pressure. And the reason for this is because many investors and short-term traders, they want to buy the stock when it's at a low price. They don't want to buy it when it's at a high price. And so there's a lot of demand for the stock at this price. So economics 101, when prices fall, demand usually rises. Now the reverse is true on the other side. When prices rise, demand typically falls. And it makes sense because there's not many stock traders who want to buy the stock at a high price. And so you typically have less buyers at areas of resistance, and you usually have more sellers. Most people want to sell at the high price. There's a lot of profit taken at areas of resistance. Thus, there's more selling pressure at that point. Now, when a stock reaches an area of resistance, it doesn't always have to go down. Sometimes it can break through the area of resistance. And when that happens, this is known as a breakout. In order for the breakout to occur, you need fresh new buyers to enter into the stock. And when that happens, when new buyers enter the market, they can push the prices beyond an area of resistance, creating a new level of support. Now let's consider this example. Here we have a stock that is neither in an uptrend nor in a downtrend, but is trading within a range. Where would you place the line of resistance? Would you draw a line of resistance here, or would you draw it here? It's better to draw the line of resistance where the price of the stock touches that resistance level multiple times. Notice that it touches it here, here, and here 3 times as opposed to 1. So the blue line is a better line of resistance than the red line. The second thing is you want to look at the previous level of resistance as opposed to one that's further in the past. The previous level of resistance is more important than one that occurred in the distant past. So that's another thing you want to take into account. So not only the number of times that it touched the resistance level, but also take into account the most previous resistance level. Now what about the support level? Would you draw it here, or would you draw the support level here? In this case, the red line is a better support level than the blue line because, for one thing, the price of the stock touches the red line 4 times as opposed to touching the blue line once. So the red line is a better area of support as opposed to the blue line. Now in this example, we could see that the stock is clearly in an uptrend. the price of the stock is generally moving in the upward direction. Notice that the stock is making higher highs, but it's also making higher lows. So whenever you see that, whenever a stock makes higher highs and higher lows, that tells you that the stock is in an uptrend. So this represents area of support, and here we have areas of resistance. So you might be wondering why the stock goes like this while it's trending upward instead of just going in this direction. Well, it has to do with the relative number of short-term traders and long-term traders. So analyzing the short-term aspect of the stock, here the short-term traders are buying, and here the short-term traders are selling. Now, the general price movement of the stock is upward. So that means that over time, there's a lot of long-term investors buying a stock. And because there's more buying pressure than selling pressure in the long run, the price of the stock generally moves in the upward direction. Now, perhaps you heard that when buying stocks in an uptrend, it's always better to buy on the pullback rather than just buying it anywhere, especially in areas of resistance. Now, let's talk about why it makes more financial sense to buy it at the pullback. Now, let's use math to help us to see why. So what we're going to do is we're going to calculate the ROI, the return on investment, which is basically equal to the profit divided by the cost of investment times 100%. So let's say trader A buys the stock at the resistance level of 40, and then he holds it and sells it at the next resistance level of 50. So he would experience a profit of $10 per share, and his cost of investment will be $40. So 10 divided by 40 times 100%, his ROI would be 25%. Now let's say that investor B buys a stock at the pullback that is at $20, and then he sells it at 50. His profit will be the difference between 50 and 20. So he would receive $30 in profit, and his cost of investment is $20. And when you multiply that by 100%, his ROI will be 150%. Notice the difference between the ROI of the trader who buys it at the pullback versus the ROI of the trader who buys it at the resistance level. So this person, if he holds it, he's only receiving an ROI of 25%, whereas the person who bought at the pullback, his return is a lot greater. As you can see, his ROI is 150%. So thus, it makes more financial sense to buy the stock when it's in an uptrend, but on the pullback. Now in this example, we have a stock that is moving in a downtrend. As you can see, this stock is making lower highs, and it's also making lower lows. As in the other two examples, you can identify areas of support and resistance. The areas of resistance are basically where the stock peaks out in this example, and where it touches the blue line at the lows, those are areas of support. So the stock can still oscillate up and down, but the general direction is downward because the long-term investors, in the long run, they're selling rather than buying. In this example, we have a stock and its price shown on the stock chart, and also a simple moving average, the SMA 20 plotted in red. Now you could use the simple moving average to get a good idea where potential areas of support and resistance might be located. So notice that when the stock is moving in an uptrend, that is when it's in a bull market, the simple moving average indicates or shows you potential areas of support. But now, when the stock reverses and goes down in a bear market, the simple moving average indicates areas of resistance, as you could see here. So that's how you could use a simple moving average to identify potential areas of support and resistance. Now, notice that the price of the stock is above the simple moving average when the stock is in an uptrend. But on the reverse side, notice that the stock is below the moving average when it's in a downtrend. That's another important characteristic that you want to keep in mind. So the price is above the SMA when the stock is moving in an uptrend, but it's lower than the SMA when the stock is moving in a downtrend. Now, when the SMA crosses the price of the stock, this typically indicates a reversal. So that's when it changes from a bull market to a bear market, or where it goes from an uptrend to a downtrend. But nevertheless, in an uptrend, the SMA 20 or an SMA 10, you could use that to identify potential areas of support. And in a downtrend, you could use the simple moving average to identify areas of resistance.